How you guys doing out there? It's a beautiful day. Hope you guys are having a beautiful day. So thank you guys for tuning in. Today I'm gonna be talking about the Index Universal Life Insurance Policy. If you guys out there just been thinking about a life insurance policy and you were listening, you've been on online, you've been hearing people on TikTok and on certain different platforms talking about the Index Universal Life Insurance Policy. Well, I'm going to be breaking it down to you guys on what the Index Universal Life Insurance Policy is, how can it benefit you, how it's different from the whole life insurance policy. Okay, so guys for tuning in. My name is Malik. Make sure you hit that like button and hit that subscribe. Helps the channel grow. And let's just go ahead and get right into it. So the Index Universal Life Insurance Policy, or the IUL for short, is pretty much you have the best of both worlds. You have safety on your money because it is a life insurance policy, which has disposition to not lose value. So you have safety there, and you have growth potentials there. Your money can grow, and there's downside protection. You have protection when the markets are dropping and stuff of that nature. So you get the best of both worlds. Okay. And similar to the whole life policy, it's something that it's a permanent life insurance policy. It'll last for the rest of your life. Okay. You wouldn't have to pay it for the rest of your life, but let's say you will pay it for 10 years. You can pay it for 10 years and just completely stop payments. You pay it for 20 years and just completely stop payments, and the policy would continue to just run on its own, and you would continue to just have your death benefit that's growing and have your cash value in it as well. So you get the death benefit, that's a plus as well, and it also grows cash value. So cash value, that's just think of it as like line of credit, right? Money you can access at a lower interest rate. Okay, and it also grows with the policy, and it also the value that you get. Let's say you pay, you don't want this policy anymore after about 5 years or 10 years, and you want to surrender your policy. The money and the cash value will be the money that will come to you. That'll be just the money that's left until the policy will come to you. Okay. Now, I mentioned earlier that the index universal life insurance policy is different from a whole life policy, and that's because you will have higher growth potentials within the IUL than you would a whole life policy. And what I mean by that is because the IUL, when you're depositing your money in an IUL and life insurance policy, you have a decision to choose to link it to a chosen index to participate in the market gains. Okay, you would participate in the market gains on the positive gains, but let's say the market goes down, your IUL, any money that you've invested in it will be safe. Okay. And what I mean by that, I've got this example here for you guys. Say you decided to link your money to the S&P 500. Okay, you link it to a market index within your IUL. Okay, and and in this example, you're linking it to the S&P 500. See, some IULs they come with a cap, and some come with no cap. What I mean by cap is the growth of that market index is capped. Okay, let's say it's capped at 11%. And let's say if there's no cap, that means if the S&P 500 goes up to 20%, you're going to get that full 20% interest from that added to your money in your IUL. And if there's a cap, you will get up to that percentage. Like if it goes up 8%, you will see that you only get 8% interest added to your money that's in your IUL. And the reason why you have that zero down, like that downside protection, as you see, if let's say the market crashes and it goes down, your money that you had in your IUL will be safe, will be protected. If you was linked to the S&P 500, okay, you wouldn't lose on your money. Unlike if you was just in the stock market, you would have lost that negative 38% if you had your money in there. With this, it's more so like you're hedging against, like you're hedging. You're only getting the positive gains. You're not getting any of the lower gains that anything that happens, right? So that's just it for today, guys. That's just a little knowledge touch base here on what the index universal life insurance policy is, how does it compares to the whole life policy, and how does it, grows. Yeah, how does it grows? So thank you for watching. Make sure you tune in next time. Make sure you hit that like button and subscribe. Thank you for tuning in. My name is Malik, and you have a wonderful day. Bye bye.